Paso, so way out on the other end.
Oh yeah. The Alamo, they call that.
Yeah. Yeah.
The Alamo's in San Antonio.
Oh, okay. Okay. A little off.
Big
Yeah.
state.
I spent some time at Lackland Air Force Base there in San Antonio. So
Oh, okay.
I did everything except be an officer in the Air Force.
Oh, you were in the Air Force?
No, I did everything except be an officer in
Oh,
the Air Force.
okay. It wouldn't surprise me. Yeah.
I
Well,
did
yeah,
RO did ROTC in college and went to the summer camp at Lackland Air Force Base. Did all the training stuff and came back and spent a couple more years in ROTC and came down to sign a contract to commit me to being in the Air Force, and they would not promise me what I wanted. And I talked to my retired colonel grandfather, and he said, "Well, you either get what you want on paper, or you should walk." And I was like, "All right." I
that's
made
a
my demand clear. They said, "Pff, whatever," and so I walked.
yeah, that's a very good piece of information. I wish I knew, so I didn't get everything I wanted on paper.
Anyway, that's yeah, I wouldn't give it up because I learned speaking skills and a bunch of other skills being in ROTC for several years,
Oh yeah,
and so I was Eagle Scout, and then combined with that, it gave me a lot of leadership skills and stuff that didn't already have.
definitely.
So anyway, all training involves a substantial risk of loss. Past performance not necessarily indicative of future results. Jack and I make trades, we make predictions, but they may or may not come true. Although, see Bitcoin, sometimes I get lucky. And
And silver.
this presentation intended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling anything, including financial instruments, stuff from gurus, or don't buy or sell anything else. You might lose money. So don't buy stocks, options, bonds, forex, futures, cryptos, treasuries, and there's people you can hire that if you need help, but highly, highly, highly encourage you just to learn to do this stuff on your own.
Absolutely.
And Bitcoin, how about it, Jack? Right down at my target on
Man,
iBit.
that's shocking. You've made so many calls. Yeah, I wrote down another one I wanted you to look at that you called perfectly. But this one, uh, yeah, this is
Yes,
amazing.
I mean, right down to the target. Like I just
Yeah,
can't even. I mean,
I know.
yeah, we were talking about when it broke down below the lows here. I threw out a debit spread trade that was buy a 49 put, sell a 45 put,
Yeah.
all the way through both strikes this morning. I made 340% return on that one.
Wow. Now the contagion has started, I think. Take a look at Mister. This thing's going to unravel. He's underwater now.
And it didn't have to unravel though. That's what I think. I see a lot of social media that he has to liquidate. He doesn't, there's no have to liquidate anything. And it's years out. It's not immediate either. All the bonds they sold have like a 5, 6 year time frame. And then if it's underwater at the end of the bond, he can just give them their money back. He didn't have to sell the Bitcoin. So, um, I don't know. I don't know.
His
It's holding up really well here at the 140 area. And it doesn't have to dip further. Now, 120 is the next downside support, but this could bounce pretty violently. We're sitting here right here. This could bounce pretty violently and come back up in the 240 area. So I'm not convinced that that one's got downside to go. Coinbase, on the other hand, this looks pretty bad.
oh, real bad.
You go off the low here and the high here, and I need to put it on a log scale for accuracy's sake, and this could take a bigger spill right down here. Could take a bigger spill. This is a cautionary point on the chart.
Yeah, that's Jacob Sharp. That's the one it was. Hood. That's the one that Jeffrey called.
The hood. I warned you about this one all the way back in
Yeah, you
October.
did. Jacob Sharp just brought that up. This is exactly what you said, right?
Look at it. Look at that. Right to the zone.
Yeah. Let's see. I sold pretty much all of it last week, so I avoided this little mess. But I'm going to get back in and trade it.
Yeah, this would be a great place to be. And in fact, I was thinking about getting some IBIT because I think we're going to be doing multi-month. It won't be like a strong up rally, but it'd probably be choppy and a great opportunity to generate some income.
Yeah, man, that going against the grain. There's a lot of fear in Bitcoin now. Tremendous fear now that it's kind of not done anything. I think with Mister, there's going to be more piling on to the
Yeah.
downside psychologically. This drop, like this drop in SLV, that's one of the most wicked drops I've ever seen in my life.
Well, we knew it was coming.
Yeah, we did,
I
but
mean,
not this bad. I mean, I would have taken a correction to 90. This thing just went. I couldn't believe it when I was getting on the airplane. We were on the shuttle and I'm looking at it on my phone. I could not believe what I was seeing.
I think it's coming on down too. I
Yeah. So this is what I'm saying. There's a little bit of fear in things that don't do anything that people think have worth, whether it's copper, silver, Bitcoin. But the leverage micro strategy or just strategy has and the psychology that shareholders they're afraid of Bitcoin now. It's not what people thought it was. And the disappointment is going to come out hard and heavy.
yeah. So
This thing, something was going on here. That's not a normal correction on silver. That's not normal. Look at how it trades. That's not normal for it to drop like that. It almost looks like a rug pull of some kind, coordinated,
looks like crypto.
like a Chinese rug pull.
Looks
China
like
was
crypto.
selling heavy. Yeah, like crypto too, right? That's what I'm saying. It kind of has the greed part is gone. It's the fear part now in metals and in crypto.
Well, this is how bubbles end. We've talked about this. There'll probably be this initial fast move, some choppiness, and then it breaks down and comes back down to resting rate. This is the way bubble. I mean, we've talked about the fact that gold and silver are probably in some sort of bubble. Now, the thing is it this part, or are we doing one of these pullbacks over here before we go even higher on the scale? I don't know. And
Well,
that's why it's dangerous.
I think the fear factor you can't overestimate that right now. Um,
It
Panic
need
kind of even hit in if you look at that.
Oh
Um,
yeah, I mean that's
just
definitely some
this
panic.
was some kind of coordinated sell by institutions or something. Things don't go down 30% like that. I mean that when was the last time silver went down that much in a day?
Well, I mean that was the biggest
Yeah.
drop, single day drop ever.
Look at that thing, man. But that's
But
we were talking for a long time about how silver was too parabolic to continue, and I couldn't stand looking at it without doing a put spread to the downside. And every day I was wrong from the day I put it on till the day it expired, which is the lesson there for everybody is when you do this, you gotta it's all or none,
that was
right?
2 weeks from the top to the bottom
Yeah.
back there in 2011.
I could have cashed this out for a little 20% profit, but I let it ride all the way to the end and it worked the very last day.
Here's another massive, and this is what I'm afraid might happen. We chop around. This is exactly like the bubble pattern right there. Look, went
Hmm.
up, initial drop, chop,
And
broke
drop.
down. That's the bubble pattern right there. And I think we're doing it again. It's just, I don't know if we're in like one of these or if we're actually up here at this point.
Do you think a little bump in the dollar caused the silver to sell off? I'm so curious about this. I would have expected a little bit of a pullback because of the parabolic nature of the trend, but man, this thing really,
I think it was a decoupling. I think people got so excited about the dollar dropping, and it was just an asymmetric trade. Like money was pumping into silver because that was the hot thing,
right.
FOMO,
Yeah.
and it kept going even though the dollar started popping. And then at some point it breaks, like, and the dollar retraced pretty steep right there.
Yeah, man. I don't know.
It's all interrelated. I mean, you can't have one without the other. And
Mhm.
yeah, and then you got people running for the exit, and oh my gosh, I'm down 30%. I'm down,
Oh,
if you
that's
got
the
it
other thing.
leveraged, you're down like even more, and it's a tough game.
Well, yeah, when you look at SLV again, why would somebody that same day, why would people just bail out to this extreme?
I mean,
Amazing study in psychology and parabolic trends.
this happens all. I mean, like you say, it's surprising, but it doesn't surprise me at all. Like this is the same chart patterns I go over all the time.
Yeah,
And
no
just
question. But the degree, the percentage, that's the shocking part. The pattern looks, yeah, exactly the same as you're talking about, but I'd rarely seen them something crash 30% like that.
like WDC, probably on a path to do this at some point. STX,
I'm
you got
still in STX. I'm
you got
out. I'm
MU, like
still in
all
MU.
these, like it's getting some of these are getting pretty wild on the
Yep.
upside here.
Yep. I'm still in them.
And
Clack, KLAC, that one's been taking its share of,
and see it's already stepping back here. It
yeah,
can come all the way
stepping
down here.
way back.
That's just where it was 2 weeks ago.
Yep.
Yeah, that's the funny thing on gold. If you just look at it, that's just where we were about 2 weeks ago. Like beginning of the year, we were down here. A month ago, we were down here. So still up 28, 28 bucks on the year.
I know, but it just amazes me that it's down again. There were a lot of people after hours trying to bid up silver, even this morning in the pre-market.
And it's hard to fight such a large market
Yeah.
because when you look at it, there's a lot of people with a lot more money than you, especially when you're playing in a $6.3 trillion market or a $36 trillion market.
That's why I say it had to have been some kind of institutional or
I guess down now
however
it's
you
now
say.
silver's dropped on down to four, a $2 trillion popping off of that, and almost $4 trillion popping off of gold.
Well,
But
the
the thing
thing,
is, the real thing is, the actual gold and silver market is kind of illiquid compared to how much gold and silver is out there.
and and that thing in the middle uh,
Yeah,
actually makes money. The other two are just concepts in your head. They don't do anything.
yeah. The value of these is just what somebody else is willing to buy it from you
All
for.
it is, same as IBIT. That's why I'm saying these conceptual assets or whatever you want to call them, that don't do anything. They're dramatically losing value.
Bitcoin's down from almost 2 trillion to down 1.5 trillion, so lost a quarter of its value. It's just it's
I
wild,
think it's
and
going to have a hard time coming back, Bitcoin. Just think psychologically, people been burned on it. They don't want to mess with it, and it didn't do what anybody expected it to do. That's the other thing. It did the opposite last year and this year. Crypto winter of
yeah.
what people
And
expected, and that's going to have a bearing on it going forward.
I was going to draw what I expect to happen here. Just lay it out for the next couple months. This was the bottom that I expected, almost to the dollar. I expected to tag 75,000. That's exactly what we
Yep,
did.
you did.
Now, what I kind of expect for the next couple months is to do something like this. Move up, a retrace, and I'll move up into this zone. And unfortunately, I don't have a specific price target very tight right now. It's going to be somewhere in this zone right here, probably between 98 and 115,000. Now, this is what probably going to scare everybody a little bit. Now that can happen into June, July timeframe. And then if we get the next move down, which should historically, if we match what we've done in the past for Bitcoin, we should wrap this all up by October, early October, give or take a month or so. But then the next move down is going to be like this, right in this
That's
30
a
to $50,000
backbreaker.
area. Yeah, this is where we'll sufficiently bum everybody out
What
right down in
date do
here.
you have there? Any guesstimate?
I think we'll do this by October 3rd.
That would be a backbreaker. I'm telling you, Mister would completely fall apart.
And that's now, Mr. could spend the next couple months rallying as we do this, grind back higher. But then if we hit and bounce off of that 618 up there around 103,000, it opens the door for this, and it'll happen like this. Right down in here, my range is the 30 to 50K area where I expect the bottom to touch.
Oh, brother, that would be the backbreaker of backbreakers.
And this is what I expect to happen. Like I expect the next, from here in February to probably out in June, we'll probably spend time chopping higher, but get people back into the hopeful phase, up around 100,000. But then watch out because we're gonna flush it out pretty hard,
Mm, mm, mm.
probably into that October 3rd time frame. This is just price action. Like this has nothing to do with what's gonna happen. I have no idea what the story is gonna be about what causes this. This is just standard price action
Yeah,
right here.
yeah.
And this is Elliott wave theory. If you really want to know how it works, it's just bouncing off of fib levels and getting continuation. This needs to correct down here around 50,000 so we can go higher on the next cycle. Right there. It's just the way it is. And you can screenshot this if you want to right here.
Yeah, save it.
Put it in your notebook.
I think it'll be a little bit worse though. I just think the correction would be harder to come back once it just sufficiently bums people out. This is more of a global asset. A lot more people have speculated on it maybe than we realize, and they're going to throw in the towel quick.
I
Chris
mean, think
says,
of it.
so who sells in a drawdown? Panic selling, guys that like the chart shows that he shows. Um, Panic selling, they just can't take it anymore. They don't want the cheese. They just want out of the trap. And that's it. I saw another question about why not place a longer term debit spread on silver. I don't know that it's going down anymore. Administrator, I see that question about silver. When I saw that thing straight up before Friday, I just was saying it and took a trade on it. I, was in the 102, 150 cent debit spread, but I just expected a quick, dramatic pullback. Not that big of a pullback, maybe to 90. But yeah, I just played it because the top looked too pointy, too parabolic. So I don't have a longer term view on silver. But I'm telling you, this what you got here on Bitcoin. This is a real backbreaker. This is going to ruin a lot of ETFs. The drawdowns are going to be unreal. Um, yeah, I
I,
just saw where BlackRock is bringing out a Bitcoin or an IBIT covered call fund that they're really in the middle of, BlackRock had one of the biggest withdrawals on IBIT ever, and they're announcing a covered call fund on IBIT. Just going to be crazy.
Hey, if you can get more people to make money, I mean, whatever.
Yeah.
More money, suck more money in to make money off of. That's the.
Yeah. Another product, to charge a 0.8% and just sell calls. Same thing you guys can do even better.
Now, I thought we would talk about that a little bit today, Jack, actually, and just kind of walk through what it is that you can do with this wheel strategy and selling covered calls. You know, if we're going to do a multi-month potential rally, this could be the bottom on IBIT here for a little bit. And this presents an opportunity that people with us here could get into. And I'll just pop this up and we can start talking about it a little bit if you don't mind, Jack.
No, I don't mind.
Um,
Let's do it.
Apparently I just closed my screenshotter thing. Let's see, jump back up here. I gotta get back to where I have it written out and screenshot it for us. It's pretty simple. I mean, Jack and I have a few differences, and if you go read this in the general on the general internet, you'll see a lot of people with a lot of opinions about the right way to do the wheel. I don't necessarily believe there is a right way and a wrong. Well, there is a wrong way. That's if you just close it and lose money, give up on it when something doesn't quite go right. But it's kind of a choose your own adventure. The first, the prerequisite here is to find a stock that you want to own shares of. If Bitcoin is just not something you want to touch, don't do it on Bitcoin, period. It's like the first step is like, what do you have conviction in? Jack and I look at different sectors in the market. I go after things like Gap, clothing stores. I go after things like HPQ. Jack, on the other hand, is you're big on Google, AVGO, Microsoft, big tech stuff. And, occasionally we come together on stuff like Fermi, FRMI or Fly, aerospace. And we find some common ground there. TSLL, we find some common ground. But, there's the gamut of sectors. There's the gamut of stocks. So the prerequisite to this whole thing is find something that you want to own shares in. You're going to have to be able to afford 100 shares of that. All right. That's the kind of the base case, default requirement here. There's lots of stuff you can do. You can hunt for stuff with high betas. You'll get paid better. We can make a list. If you start with the stuff making 52-week highs in an uptrend, that's a good place to start. You want to find stuff with liquid options. If it doesn't have weekly options, it's probably not the best stock to be doing wheels on. All right.
Maybe a beta close to 1.5 or over 1.
Yeah, something higher than 1 is usually better. You're going to get paid better. I've proved time and time again that that's not always the case, though. Like sometimes you
Right.
can find them just under 1 and get paid plenty.
Yep.
But the higher the beta, the more volatile it is, and that causes the stock price to move more, and that in turn causes the options to be more juicy, and you can sell for more premium. Now,
But it can also be a little more nerve-wracking my way. And so Jeffrey's way has been very slick regarding not getting assigned, not having to put to him, not having to call the weight from him. Mine, it happens every week. I mean, I got a list of them here. I just got assigned Vert and ASTS and stuff like that. But yeah, it doesn't have to be a high beta. That's just me personally. He's done it on. He could find a needle in a haystack on anything. So
so the
just
two of us do the same strategy, but we do it a little bit different ways. And there's no right way, there's no wrong way. The right way for you is whatever you can do and sleep well at night.
yeah. And it doesn't have to be risky or wild or volatile. It doesn't have to have any of that. It could just be something that matches your personality. I like the high beta stuff because that kind of fits me better after doing this for 40 years. But just find a stock that trades the way you like it trades and has, weekly options at least, and maybe in a good trend or in a trend or in a pattern that you like. Jeffrey likes patterns, so very easy to implement. And it really is that choose your own adventure. I like that description.
So step one in this whole thing to get started, after you've found your stock that you would want to, own shares in, you sell a put in that stock that you would want to own at a price that you would want to own it. Preferably below price, but it doesn't have to be below price. You could be at the money or even slightly in the money and get, depending on the juiciness of the particular stock, that could work out for you. Now, if you expect it to go rocket ship higher, you might sell it in the money, especially if it's juicy and has a beta of 2, 3, 4. You could really get paid on something like that and not get put stock. So number one is to sell a put. Now, a lot of people are really concerned. They're like, oh, I've heard put selling naked is really dangerous and this, that, and the other. cash secured. You got to make sure you have dollar for dollar enough money in your account to buy 100 shares per put you sell. And, for something like, I'll just grab a platform, pull it over really quickly with IBIT on the docket here. If we were going to sell out here, now it has 3 times a week options. So
We've
if
got
we
a
came out
lot
to
to talk about
Friday,
there, but let's just stick with Friday. Yeah.
if we came out to Friday, 4 days away, you could jump in here, sell something slightly below the money down at 43, collect 51 bucks a share. This is going to take $4,300 minus the credit. So you're actually down at $4,250 required. If we create the order, we can see that $4,250 required in your account.
You get paid instantly.
You
51.
get paid that 50 bucks. So you're committing to buying the shares at 43, but you're getting paid 50 bucks. So it requires $4,250 of cash in your account.
You're getting paid to make a promise. Your promise is I'll buy it at 43, and you're getting paid to make that promise. Whether you get it or not, you keep the 50 bucks.
So this would be the first action. Now, can you do it? When would I do this? Would I do it 4 days? Would I do it 1 day? Would I do it 11 days? Would I, it's wide open. You could do this for today if you wanted to.
I did it on AVGO, but let's stick with the lesson.
You could roll in here now that we have 3 times a week. You could do this 3 times a week and keep hitting it. So that's step 1. Step 2 is where we get some choose your own adventure, multi-choice things. All right. There's some different things that can happen once we've sold that put. There's some different things that might happen. And that results in different actions you might take. So number 2A, the first option is that the put becomes profitable and you close it for profit. Or price doesn't dip, it goes higher, the put becomes worthless, and you just let it expire. You got profit, you're out of the put, nothing happened, you didn't get put stock, you didn't, you can recycle back to step 1.
You keep 100% of that 50 bucks if it
Now
expires worthless.
If it expires worthless, you keep all the 50 bucks. You didn't have to buy anything. You didn't have to buy any shares. You didn't have to do any other action. And you just go back to step 1. You look for a stock you want to own and sell a put. Now, 2B, if things don't quite go up, maybe the stock dips a little bit between now and expiration day. You don't close the put. Maybe you're in the money a little bit, maybe a lot of bit. Maybe IBIT dropped to 40. You're a few bucks in the money. You could take assignment. And you can still close it for a loss, but I don't like to close any of this for a loss. I like to.
That's the first thing. You don't have to take a loss on it. Even if you get it put to you at 43 and it goes to 40, it's just an unrealized loss. We'll move on and show you how to cash flow that. But I saw the question about don't ever take assignment. No, you sometimes you can take assignment. It's okay.
In fact, I love taking assignment,
Me too.
especially on stuff underwater, because that's opportunity. Because usually I'm into stuff that I'm bullish on. That's the whole point. That's the whole reason I would buy it. If I'm bearish on it, don't ever sell the put. Like that's back to the prerequisite. If you're bearish on the stock, don't do this on that stock. Period. End of story. All right. If you expect the stock to go down further than where you're selling the put, don't sell the put. Just wait. Just wait. All right. Everybody clear on this? Like, taking assignment is where the big money actually starts coming from.
That's what I like. I love it. I got assigned over the weekend twice. Good stuff.
So taking assignment is where you unlock a big potential profit on these. Now, step 3. Now, after we've taken assignment, so step 2A, we go back to the beginning. Step 2B, we come down to step 3. All right. So step 3, if it dipped on a Friday and you got assigned, say IBIT, come this Friday, it dipped down to 40. I was looking at selling the 43. Say it dipped down to 42.50. Put me in the shares. Come in on Monday. Next Monday, it's at 45 again. I can sell those shares right then.
And that happens. That exact scenario happens quite a bit.
I could sell the shares at or above the price I was put, book profit. I got profit on the put, and I'd get profit on these shares, and then I can go back to step one again.
Yep. The assignment can be a gift, a real gift. Or if you don't sell the stock, let's say you get the stock put to you at 43 on Friday, and on Monday it's at 45. You could sell it and make $2. Or you could keep it and go on to 3B.
Yeah, and say it could be above your strike price, it could be below strike price, it doesn't matter. 3B, you decide that you're going to make money out of this. You're going to keep cash flow on this baby. You're going to keep these shares, and we're going to sell a call at or above the strike price that we were originally put. Now, this isn't always possible. Sometimes you got to go below, but we're just going to try to keep it simple here today. So I'm not covering all potential possible twists and turns along the way. That's why I highly suggest you start small, do a few of these, very small, just practice, paper trade maybe, till you get the hang of how this all works. So at a minimum, we want to try to be above your cost basis, because when you sell a call, you are making the promise, you're committing yourself to an obligation to sell your shares at the strike price that you commit to at any point in time between when you do it and the expiration. They can call you out at any point in time. And if you're below your cost basis, and this happens, you have just guaranteed yourself a loss. And what did we say in the beginning? The wrong way to do it is to close it for a loss. So if you sell a call below your cost basis, you've got to be very careful that you don't get called out and guarantee yourself a loss. Otherwise, if you're above your cost basis and you get called out, you just guaranteed yourself a profit. All right. If you have any questions, let us know in the chat.
That's assignment 2. There's the put assignment.
Yeah, this would be
putting it to you, and there's the call assignment where they call it away from you.
Yeah, this would be getting assigned on the call. You sold a short call. It's called a covered call. You have the stock to cover the commitment of the call that you sold. Now you hear about people selling short calls and they're uncovered. We're not talking about that here. We're not talking about that at all. Like, we always have the shares to cover the call that we sell in this case. All right. So if we were put, back to the example here, if we were put this Friday on IBIT at that 44, 43, we could rock and roll, come in here the next week, potentially sell something up here in the 47, $48 area above our 43 and get paid. All right. Moving on. So after we've sold that call, we're still keeping it. If we had sold the shares and gone back to step one, we're back here at step one. But 3B, if we sold the call, we're moving on to step 4. Now, step 4, you rock along at the end of the time frame, you can close the call for profit. If the price didn't come up to where your call is, the call is, pretty good profit. Maybe you're at maybe you sold a 48 and it's at 47.90, and you're like, well, the call's profitable and I don't want to get called out. I'd rather keep it going. You can close the call. All right. But if it's, you sold the 48 and it's at 45 and the call is basically worthless, you can let it expire worthless. And you just go back to step 3B. Sell a call again for further out in time. Doesn't have to be weekly, although we find that weekly does pay pretty well. Now, step 4B, if your call got in the money, you're not really able to close it or roll it from profit, you can just let it get called away. You book your profit out, and then you jump all the way back to step 1. This is why it's a wheel, and it's kind of why it's a choose your own adventure, because there's no have to do any of these steps necessarily. The thing you don't want to do is close it for a loss.
Keep
I did one of these.
rolling. Yep.
I did one of these for like 18 years. 18 years. I kept it going. So a lot of people have opinions about the right way to do it. And Jack and I have some differences of opinion on, best practices, but I show, on the show we show examples of how we do it every week. And
Every
make sure
day.
you come back. Every week, every day, we talk about how we're doing these. And we can, we show off examples of how we're making money doing this. I've got one going right now. I got 4 puts on TSLL. That's Tango Sierra Lima Lima. It's a 2x leverage on Tesla. I started it in September. So I've done it all of September, October, November, December, January. Now we're into February, almost 6 months now. And I've accumulated over 50% of what it would cost me to buy the stock in profits just from selling options. And I haven't been put yet. I just keep doing the same strike puts and just keep them going every week.
Cash flow weekly.
Weekly cash flow. That's the goal here. Now I can jump in and look at some of the questions. What if a stock is way down and you need to sell below your cost basis? I've got an example of that. This stock right here, CMG. Now, I thought this was my pattern. I thought A, B, C. I thought this was the bottom. We came up. We were right at my 618. Looked like we were going to break through. We had pulled back just a little bit before earnings. I rolled in here and sold a 49 put right there. Right before this earnings, right over here. I sold it, and guess what? It went right down through my 49. I got to buy those shares at 49, and guess what? I still have those shares. It still hadn't come back, and it went down even further, right? So what have I done? I've done a lot of things. I've sold some upside calls in here as we dropped on down. Some of it down in the 45 area. I sold another put, not at the full size. I sold this one up here, got put, I think it was 300 shares originally. I sold another 2 puts down here, or maybe it was 4. I think I did 4 up here. 4 was the original. Sold 2 more down here at 31. So I was in at 4 at 49. So that's 400 shares at 49. Sold 200, sold more at 31. And actually it was 32 because I got put at 32. 32, and I got put when it dipped below. I got put more shares. But what this did was bring my cost basis down to 44. Now I'm just about to break even right here. And I've been selling upside calls at 48. Above the 44 cost basis now. And this 44 is with the premium I got on the way down, and the premium I got here, and the premium I've got on a few calls I sold in here. In the meantime, and in between time, I'm still underwater on this. Still working it back to profit. I still think the upside potential, if and when this thing finally gets its crap together, get back above this 50 resistance zone, fill the gap over here. Once we get through this, upside potential, 76. You can think I'm crazy. That's okay. That's what makes a market. I'm in
You're
it to win it.
underwater, but you have an unrealized loss, and you're underwater, and you can still cash flow the asset.
Yeah, I'm underwater on it. If I closed it out right now today, if I had to have the cash right now today, I would have lost money. I don't have to have the cash right now today. Instead, I'm taking it, using the asset, which is the shares, and using those as collateral to sell these upside calls out in time and bring in more money
Every week.
which lowers my cost basis. And eventually I get to where current price is above my cost basis. And then I could close it out for profit. Or keep riding it up to a bigger profit target. And
And keep calling calls.
right now, if it goes to 77 and my cost basis is 44, that's $33 a profit
On
times
700.
600 shares that I have right now. And just to make sure I do the math right, since I'm on screen, I tend to do math wrong when I'm in front of people. 33 times 600, that's $19,000 potential profit right there. If it goes up here, plus any premium I get along the way. So $19,800 potential profit plus any premium that I collect along the way up here. Now, I could get called out in here and not make that much, but that's okay. I'll be fine if that happens. I'll just move on to something else. I've caught this move plenty of times on lots of stuff. So this is the, big potential here. And you might be concerned about how much money I'm using to do this. I have $44 a share times 600, yeah. So I'm using $26,000. If it makes 19,800 in profit, that's a pretty good chunk of money, right? We can do the math on this. What kind of return is that? Way more than the standard 40% we've been talking about. 75% return right there. Now, as far as how much cash to use or how big to go, it's really up to you. I'm getting to the point where I have my account, which is about 120,000 divided into 10 different positions. Now they're not equal. I have some that are bigger than others because I'm trying to work some of them out. But I got about 10 different positions I'm willing to manage. I can handle 10. If you can't handle 10, do 1, do 2, do 3. But I wouldn't put my whole account into it because you need some capital to, like, if things don't go the way you plan, you need some capital to be able to dollar cost average down a little bit. Now, Jack, I know you don't care to dollar cost average. You don't
Never.
usually add anything to the losers.
Never. I only buy more if it's going higher or if it's up. I only average up, never down.
So this is where Jack and I, differ just a little bit. I'm willing to pull my cost basis down, put a little more onto it, and try to work it back out for one that didn't go according to plan. Jack, not willing to do that. All right. So you got to have your own comfort zone in this whole choose your own adventure thing. Lots of ways to do it. The wrong way is to close it for a loss. All right.
And you don't need to close it for a loss because you can continue to cash flow it until you're at a profit. That's the other thing. You really don't ever need to take the loss.
Yeah. Somebody says I typically have all my buying power used up. If you're comfortable that way, that's great. But it gets you in a jam. You have no way to fix anything. If you get jammed up, you're going to have to close something for a loss to be able to try to fix something.
I think VJ, he's just demonstrating that this is a case where he's using the wheel, but he's underwater.
Yeah,
Not necessarily to start it right now.
I mean, it's personal preference. If you wanted to jump on it right now, great. But some caveats here. It's below 1 on the beta. It's not paying what it used to be paying. Back when I started this, it was above 1. Now it's below 1. So it's not, I'm having to go further out in time to get a nice payday on the options that are up here at 48. Now, if we start breaking higher, this thing will probably get spicy. It's just 1.
It'll go up. Premiums will go up.
Another one that I have that's actually on a break even right now. I sold the 2050 on this. And got put at 2050. I expected that 19 would be the bottom. And so far, 19 is the bottom. I just sold a 21 for not this Friday, but next Friday, 11 days or whatever. and collected $16 a contract. And that was 16 cents, but $16 a contract. So I'm lowering my cost basis again. I've done this a few weeks now. Just keep working this. I sold the 2050s a couple weeks, got put. Now I'm selling the 21s above it. If I get called out, there'd be 50 cents profit on the shares plus the premium I collect here. It's not horrible. This is not taking a ton of capital either. I have 200 shares, so this is taking roughly $4,000 profit or $4,000 of cash to do this. And cash what? And Jack thinks I'm crazy. He's like, this is a downtrend. It's, not one I would touch. But to me, this matches my pattern, my big long-term potential bounce pattern. We're at support. And if this starts running, there's the potential this comes all the way up in the 50s. Maybe even the 70s. That'd be a pretty nice trade, getting it down here at 20 and closing that out at like 80. 4 times your money just on shares. So these are the kind of things I go after because I have very high confidence in these patterns right here. What I did back in the summer, last summer, Rocket Lab, we had one of my patterns right here. I didn't do it right here. I waited until right here and I started selling the puts. Started selling puts starting right here in May when we were breaking above my 618 line because I had a strong conviction that we were going higher. Started selling puts, did that weekly. Right here, I got put. Right there, I got put 1,200 shares. Nice big fat position. This popped. I sold calls, sold calls, sold calls. Every week, got called out right here. This trade right here made about just shy of $13,000. Shows up right here on my public CAMFO record right here. Everyone wants to know what happened right here. How did I make a big chunk? That was Rocket Lab when I got called out of the shares. Booked a big chunk. This right here, that pop was Dollar Tree. I got called out for $25 profit a share. I only had 200 shares here. I had 1,200 shares here. So which one was the bigger trade? Or which one had more money involved in it? They're kind of about the same.
That's a nice growth curve, though, folks. Look at that.
And Jack, you missed it on Friday, man. My man, look at this. I'm back in the profit.
Yeah.
Recovered that little bit of loss I made.
Yeah.
Back to new all-time high.
There you go.
Closed the
Just
week
a
out.
matter of sticking with the system, right?
Yep. Just got to keep it going. Even though I did something stupid, tried something new, didn't work out, learned don't touch the hot stove. Now back to what I was doing, small gains every day, back to all-time high. And this was a pretty sizable drawdown, everybody. This was a $4,000 hit right there. Tried something new, it didn't work. So I was back on just making consistent gains every day, which is what I've been doing for months. Year to date, 8,500 for the 1 year, which April is when I started doing this. I'm up 60. I should be 61. Let me refresh this.
That's so
there it is,
cool, man.
$61,000. Broke through the $60,000 ceiling on the way to
Seems like
70.
you just broke 50. I remember when you broke 40. This is happening so fast.
Yeah. That's a funny thing about this. If you're consistent, you can make a little bit of money every day. Everything adds up really quickly. You really start stacking. Back in the summer when I was doing Rocket Lab, I was up 20 grand since I started. And very quickly, into November, I was up 30 grand. Then December, I was up 40 grand. Then 50 grand coming into January. Now 60 grand coming into February. Should be up 70 grand. Maybe I might be 80 or 90 grand by the time I get into 1 year. I started this whole thing April 15th. How much money did I start with? 75,000. Yeah, I've added and subtracted money along the way, but I started with 75,000 doing the wheel and some small NASDAQ income trades every day. Just trying to get a little bit of profit booked in the account every day.
And
Adds
it's
up.
out there every day. You can do it every day. We do it every day.
Do it every day. Some little trade I'm doing every day, booking profit.
Yep.
And all the trades are posted right there on KInfo for the public. You see, got some DJT, which Jack would never touch. I got some HPQ, which Jack would never touch. I got some TSLL. I got some Docu. I got CMG. I got, all sorts of stuff I'm cash flowing.
You ever do VRT?
No, it's too expensive. Like
Oh, man.
I have about $100 cap. I can't really do stocks over
Per share?
$100. Yeah.
Yeah.
Once they
That
get
thing's
over
been
$100, I just
phenomenal.
can't justify putting that much money into one stock.
This thing's just been unbelievable. Um, yeah, they put it to me at 187.50 on Friday. This is a great example of getting assigned and having it be a gift.
Now, Jack, a lot of times will go right at the money with these when he sells, looking to get the shares put to him.
Mm-hmm. If it's in
This is,
an uptrend and I can buy it on a little down pull down within the context of an uptrend, that's my sweet spot.
and then, I typically, for people looking for what I go for a 40% return on investment when I'm going after these. And what does that mean? It means when you annualize the stock in the put. So coming in here, we were talking about IBIT getting after this Friday's 43. So you look at that, that would get you right now, it would get you 41 bucks, 42 bucks, 42 bucks, 42 bucks. It would take about $4,300 to do. I'll just do rough math. That's for 4 days. So divide it out, 4-day return. That's 0.2% per day for 4 days. You take it, annualize that. That's an 89% ROI right there. 89%. If you did this every day, like if you jumped out a year and you could do the same, you get the same money per day, the same return per day, you'd be making 89% on this position.
Now, the reason, if you back this up, the 40% is because for the $50,000 a month challenge using 1.6
Yeah,
million, then
back to
you're
this account right here. My goal is to get to where I'm making $50,000 a month consistently. So this number for 1 month, which right now is sitting at 8.8K. I'm trying to grow this account right here so that this number is 50K per month. Now, at 40% annualized ROI, a $1.6 million account can hit that.
Yep, that's good living. 50 grand a month is good stuff. And see,
1.6 is not
1.6
a
million, it's not invested in a stock, it's invested in a strategy, right?
right. Yeah.
Strategy selection is more important than stock selection. And just without even, he's even done this without even touching the stock, right? Made 3 grand TSLL without even ever buying a share of stock. It's a whole case study right there.
So right now my account's about 120,000. My target is 40%, but I'm actually bringing in above target. And it's just if I was at the target rate, it would take me about 5-ish years to hit my compounded goal, compounded weekly, basically with this. I might get there sometime this year with the rate I'm going right at the moment. With the accelerated rate of gain that I've been doing, I could possibly get to the 50K goal by November this year.
I'd love that, man. I think you can. If I could buy a stock and you were a stock, I'd be long Jeffrey Turnmeyer. This guy's doing it.
And I sit here and show these trades every day
Yeah.
right here.
Now the other thing is,
So,
it could be 1,600,000, it could be whatever you're using, but just think of it like at the end of the month, if you're up, just wire or move yourself whatever profit or part of the profit, and just stick with your cash account that you're using to generate cash, and then once a month, move the profit over there to your
yeah.
checking account.
Yeah, you don't have to keep scaling past the 1.6. Once you hit the goal, you can start building your dividend account,
Yeah,
your cash machine account that you don't
yeah,
have to put any effort into.
none, and it's the lowest tax you're going to get on money.
All right. So, Jack, do you see any questions we need to hit? I mean, we
Let's
burned our
see.
hour here.
Yeah. People want the replay. This has been a great presentation on the wheel. Sammy says every time he gets assigned, he loses money. But now you don't have to, Sammy, because if you get assigned, just sell calls against it until you're at your profit. Is there a specific day you prefer to sell or roll? No, not anymore, because almost every day you can find something especially with stocks that have options 3 times a week. And we do roll. If you sell an option, let's say you sold that put for 43 cents or 50 cents, and that option goes down to 1 or 2 cents, we'd buy it back at a penny that we sold at 50, take that profit, and then sell another put a week out or so.
And TSL has been a big money maker.
Unbelievable. This is the gift that just keeps on giving.
We're looking for this to pop, but right now it's just stuck in this range and it just keeps generating money right there. The beta on this one really high,
This is
3.3.
a simple one to do the wheel on. I mean, it'll only take you $1,500 or so.
Yeah, and it doesn't even run away from you right now.
No,
It hadn't been running away. There will come a time when this actually does move and we'll have to find something else. But right now, I have the most amount of money into TSL right now doing the wheel out of any other stock I have.
this one, every time I get assigned, I just love it because it is the gift of assignment. And either way, you sell the 2050 call, you get, you sell the 18 put, you get put, you sell the 2050 call, you get it called away. I like to play it right in that range. But Jeffrey, the amazing thing, in one account, he's never touched it, never bought one share, and made $3 grand off of
Almost
using
$4 grand, just shy
yeah,
of $4 grand.
like using like 7,500 or something, right?
It's
Just amazing,
it
man.
if it's using 7950, 7950 in account. This is the
Selling
amount of
puts.
cash they reserved for this. But I brought in $3,800 in profits selling puts.
So using that 7,950, using that cash to create cash flow, and the asset is TSLL.
And
Pretty simple.
I haven't taken any shares. So I've just taken the put, rolled it forward every week, all the way in here, including this week,
Amazing.
brought in $3,800 in
Without
cash
ever
flow
earning. Yeah.
without ever buying stock.
Now
Yeah,
imagine making 50% without ever touching a stock. And people say, well, how would you make 50% if the stock did not go up 50%? Well, that's exactly how.
and it's actually down from where I started this. And it's actually, I'm sitting right here at this, basically right at that level, right there at the 19. Now, if I closed it out today, I would take a little bit of loss on the put, but right now I have almost 50%. So take that 19 divided by 2, and we're talking about I'm down there around 950 with my risk right now. If I were to take those shares, my cost basis is down at 950 down here on these particular set of 400. So I could sell anything up here.
All good to go.
Even if it dropped on down here, I could still sell in here. And if I got called out, I'm above
Uh,
even.
If you're not in this one, your first move would be to sell a cash secured put. You could
Yeah,
start wheeling this thing right now. Just so everybody knows, this is a Tesla two timer. So if Tesla goes down 50%, this is going to go down 100%.
yeah,
If Tesla goes
potential.
down 50% or 25%, this would go down 50. Conversely, if Tesla goes up 30%, this will go up 60%. So just beware, the downside can be harsh.
Yeah, it was harsh over here.
But right now, both of us agree. I think Tesla's going to be a great stock this year. They did exactly what I wanted them to do, which was change the narrative from losing money trying to sell EVs against China to robotics, the new narrative. Everybody going to have their own robot and going to be controlled by guys in space. So we got that to look forward to.
You know, there's no particular days I do anything. I showed off this is the only thing that holds constant is this right here. Everything else is flexible. There's no universal anything. Like this is what I holds constant.
Yeah.
Days, you know, sometimes it's 2 weeks, sometimes I have to go a month out, sometimes I have to, I mean, there's flexibility. What I use, and I wrote down
Yeah.
the things that are the steps. All
Yeah.
right.
I would say step one, not necessarily B. Yeah, step 1B would be, if I had to just tell you, is have a stock that, you're willing to buy, of course, but also have the stock that you're willing to let go of. Because that's been my problem sometimes with this. If I get one that starts trending higher and higher and higher and higher, I have a hell of a time getting called out. Like, you get a $52 cost basis on NVIDIA, you don't want to get called out at even at 180. That's going to create a massive tax problem. So you got to be willing to let it go.
Well, it's
And
like
Matthew,
Rocket Lab. You asked me, aren't you going to get back into this?
yeah, I
You
would.
just
I
made
have.
13 grand, and I told you that I got to leave it alone until it comes
I
back to
know.
my pattern.
I know. And I can't leave it alone. So I keep selling cash secured puts on this thing and I like it. But I like this trend, right? So when it dips down, I like to sell more puts. And when it's up, sell calls.
So that's, don't get emotionally attached to them, is what
Right.
Jack's saying.
Yeah, because I have a hard time. Once they start going good and I got a big profit, I want to marry the thing. And it doesn't pay. You got to be willing to let it go and stick to the discipline, which is using the cash to create cash flow and using stocks just as an asset to create cash flow. Nothing to fall in love with or like it. Just keep the machine rolling.
And this account I'm showing off right here is a taxable account because I'm trying to build an account for me that generates $50,000 in taxable income. That's just my personal goal. Why?
Yeah.
It's my personal goal. It's my family and I want that kind of money.
Yep. It's good. You can go for it too. That's the thing is the stock market is willing to make you as wealthy as you want to be. And you could do it in an IRA or a Roth. Richard, I do it in an IRA, but I can't spend that money right now. So I like to, you know, sell a bunch of premium and then eventually move it over once a month.
So there you go. That's how we're doing it, everybody. Jack, you got something to
I
share
got
with
something
everybody?
so cool. Yeah. All right. I'm going to share it with them right now. It is maybe if my good man Blake will let me share the screen.
I stopped
Yeah, come
sharing, so you
back
should.
tomorrow, Sammy and Richard and everybody. Come back tomorrow because we're going to do it again. And what we didn't get into today, which I wanted to, was these new 3 time a week options. Uh, just unbelievable. Just it's killing me, man. I've been selling the dailies for today on some stocks, and it's just super rich and a lot of fun. But
Yeah,
we'll get
today
into
is the
that.
first day we have those new options
Yeah,
actually
yeah. And I'm
expiring.
like, I know today's the first day for the 3 day a weeks, and I'm like a kid in a candy store. I cannot get enough of this. These 3 days a weeks is the biggest gift for premium sellers since the invention of options. I'm telling you, this is just getting better and better. So yeah, come back tomorrow. We're going to keep rocking and rolling. But right now, I'm going to show you something that's really cool, something that's different, and something you may want to get in on today. So before we get started, mandatory disclosure. You need to know this. The profits and performance shown are not typical to any one individual, and you may lose money. We develop tools and strategies to the best of our ability, but no one can guarantee the future. There's always a risk of loss when trading. Past performance is not indicative to future results. And the trades expressed are based on historical signals with the benefit of 2020 hindsight from the icebreaker software in order to demonstrate the potential of the system. Testimonials showcased today are from various programs of mine, Jack Carter. See our terms on the homepage for more information. Now, I'm going to share an overlooked signal that often fires off on many stocks. It's very overlooked. Just days or even hours before they start to break out. And as you'll see today, this signal is not based on some boring technical pattern. No fundamental analysis or no transactional volume. This is just completely different. Yet, it's shown the power to trigger some of the top returns on individual stocks market wide. In fact, it's so powerful that according to researchers at New York University, stocks powered by this signal haven't seen a losing decade. That's powerful stuff you need to know there. And that's over 100 years, right? This is incredible